So welcome to Forex Pros. So first of all, after a very long time, we have started making the analysis again and also giving out the free signals. So before you do anything else, first of all, go to the Telegram channel. The link is in the description. Join that channel so that whenever we give out signals which are completely free, you can avail them. You can make some good profits using them. Secondly, do subscribe to the channel so that whenever we analyze the market, you don't miss that. So today we will be discussing the market of gold and seeing that what kind of trading opportunities can be found. And our analysis is I try to make this analysis as educational as possible so that you guys can learn a lot from it, and also try to keep it at a very basic level so that even if you don't have the very advanced level knowledge of the market, you'll still be able to understand every little aspect of the market in a very prominent and a very easy way. So without any delay, let's go to the market, and let me make myself a bit smaller. Yeah, so I'll be down in the corner, and let's go to our screen. So my favorite pair is gold, and we used to do multi-time frame analysis. Multi-time frame analysis means that we start from the higher time frame to get the basic idea of the direction and move down to the lower time frames to see all the aspects, all the possible scenarios, and we need to plan for the upcoming week. So first of all, on the monthly time frame, the situation is very interesting. Why? Because what we can see at that when the market broke from this region, that's quite a few months ago, like market broke in February. So in February, when the market broke above this region, we have seen that the market has continuously make a bullish momentum towards the upside up to 3500. And now what we can see is that the market is slowing down on the monthly time frame. We can see that basically we have a 4 to 5 months of rejection from this area, and getting some huge rejections on the monthly time frame is very important thing. So we can expect the market to now give us a little bit of retracement, because if we take the Fibonacci from bottom to the top, what we can see is that at least 0.382 level retracement, which is around 28-27. So on the monthly time frame, we can expect the market to come down a bit down, and even if the market plans to go up again, it still needs momentum, so it will get the momentum by coming down a bit. So that's on the monthly time frame. It does not mean that you can start selling on the monthly time frame. It's just a basic idea of the direction, so that when we move to the lower time frames, we understand what is happening. So on the weekly time frame, the situation is quite similar, but one thing we need to know is that basically this is a support area which the market has been respecting for quite some time. And if we take a trading channel from this point, and we can see that the market is basically in a bullish trend till now. And also, as we can see that the market is now, maybe the market might make another move towards the upside, because this is the resistance area and this is the support area. So on the weekly time frame, as we can see that this trend line is about to get hit. It's basically it got hit in the last week. So this week we can expect the market to go back up again up to 34.41. So that's quite useful information for the upcoming week, that we are expecting the market to go up more than 1000 pips. So it means that if we're able to capture the right movement from the bottom, we can gain 1000 pips. So again, do join our Telegram channel so that you don't miss out the signals, and if this trade comes, we will definitely point it out for you. We will give out the signal which will be completely free, and you can make good profits from it. Moving down on the daily time frame. On the daily time frame, the thing is that we need to remove this trend line, because it is important. It is a very important trend line on the weekly time frame. But on the daily time frame, I have something very interesting, because what we can see is that the market made a W pattern. So what we can see is that market made a W pattern, and it is now coming back to respect its bottom neckline. So one thing that I've seen multiple times, okay, so it does not mean that I'm giving you financial advice that this is a W pattern you should immediately start buying. This is for educational purpose, and you can see that the closing of the previous daily candles was exactly at the support line. So one thing which is very interesting, and I hope that you guys have noticed, if you didn't, it's okay, but whenever there is a support line and we see that the market is coming down and it's closing at the very prominent support area, it means that the market will be bouncing back up again. But why? The reason is that I've seen that when the market is planning to break the support area, it either closes below it, or another thing it does is it tests and close the candle with a tail, a wick to the upside. So at this area we can see that the closing was perfectly at its point, so we can expect the market to go to the upside, at least like we discussed 34.40, 34.45. So this is a good upcoming trade which I definitely don't want you guys to miss, and I don't want to miss it myself. So it does not mean again that when the time comes you immediately start buying. The reason being that is, if you go on a smaller time frame, like on the 4-hour time frame, what we can see is that we have seen that the market has, this is a W formation, and I've plotted a longer resistance. I'll explain that to you in a second. We can see that there is a W pattern at this point. So on the 4-hour time frame, we can expect the market to come down around 33.10, 33.09, and then continue its movement towards the upside. So again, there could be a fake candle, fake movement towards the downside, testing the 33.09 area, from which we can expect the market to go back up all again. And if we find a confirmation, if we find the confirmation at this point, we will definitely go for a bullish move, a bullish trade. And another thing that comes into mind is that, what if we sell when the market opens to 33.09? And this could be a good point, but again, this is a bigger move. So we're expecting like more than 1000 pips, approximately 1300, 1400 pips. And this move towards the downside is 200 to 50 pips. So risking 1000, 1300 pips over 200 pips is not a good idea. It's never a good idea. So I hope you understand what we are planning for gold this week, and this kind of trading opportunity does not come every day, because recently we have seen gold that the market is more of a range bound, not moving in a clear cut trending direction. So we can expect the market to give us this move, and if you like the analysis, do like the video and share it with your friends as well. And also tell me in the comment section which pair or topic would you like me to cover in the next video. And again join our Telegram channel so you don't miss out the signals. And the signals are completely free. You can try them, you can make profits from them. But again, another thing which is very important, risk management is the key to success. We'll make a complete separate video regarding the risk management, what kind of system should it be, and what kind of risk, why risk management is important. Because a lot of people think that trading the market, analyzing the market, understanding the market is the main part. Honestly, it's only 10 to 20% of the trading job. The main thing is to go for the risk management, and which we will try to teach you. We will try to understand that what kind of risk management strategy is required. It's not only that you need to put a stop loss or a TP. It's a completely different set of idea how to look at the market, how to look at the trades. For instance, we are expecting the market to go up to 1000 to 1300 pips. So now in this kind of movement, we need to come up with a plan so that when the moves come, we're not like completely into it 100%. That, like, for instance, there is a possibility that the market could come down, and we're so invested in the bullish move that we keep buying until and unless it closes out. So this kind of things, these kinds of predictions and these type of movements need to be captured, and how can we capture them? This will be the topic of our next video.